Fridays with your boy Buck Bandit P, man, here on the Financial Corner, man, where we break down investing for average, everyday people so we could go out here and get this money. No shortcuts, no excuses, only progress. You already know what we on around here, man. We really trying to build generational wealth. It ain't just a buzz term. And it ain't really that hard either. Let's get right into it. What's going on in the market this week, man? Yo, listen, you would think that the bull run is in. First of all, the big headline, the S&P 500 crossed 7,000 for the first time in history. This is major. Pay attention to this. You might not understand what this means, but we're going to get into it. All right? So, after the S&P had a bumpy road at the beginning of the year because everything that's going on, it dropped 9%, right? After that, the market went on a 16-day win streak, and at the time of this record, the market's still up. So it's going to be on by the end of this video, it's going to be a 17-day win streak. For all my sports fans out there, let me break this down for you. Y'all understand how hard it is for a team to go on a win streak. So imagine they win one game, they win 2, 3, 4. 16 is crazy. That's unheard of. Like, if your favorite team, all my basketball heads out there, your favorite team went on a 16, 17 game win streak, they probably leading in the conference. Like, they probably one of the head honchos to make it to the finals. We just kept hitting all-time highs every day. And it's like, yo, with everything that's going on, how is this happening? Earnings, remember I said what y'all should pay attention to? The earnings report to all them big banks, the financials. I already got into the sectors. If y'all don't know y'all sectors, make sure y'all go watch that other video. But I already got into the sector. So financials reported last week. The big companies, they knocked them earnings out the park. What happens is when the financial companies, like when the big banks report good earnings, that means me and you, the consumer, we still got money to spend because we still spending money. We still taking loans out. We still trying to do this, do that, getting debt. The earnings report from these financial institutions come back like that. That shows the economy is still strong. So that's why you see the stocks still jumping out the gym with everything that's going on. Also, the tech dominance. I know all my people out there who've been tapped into me, y'all done seen what these tech plays been doing. The Mag 7 been down. The Mag 7 been beaten down. But as of late, they've been coming back. Amazon doing. You see what Google doing. You see what Meta doing. You see what Apple doing over the past weeks. Like, it's starting to turn around, it's looking like. Why did all of that happen? Because of Trump tacoing again. I had some tacos last night. Tacoing again and letting the market run up again. Honestly, like, allegedly, this might be the most craziest market manipulation we done ever seen. Like, a president technically not supposed to say, yo, buy stocks today. Like, he not supposed to mention the stock market as, hey, I'm doing, like, he's really manipulating the market, but get out your feelings and get in your bag. Like, that's all you gotta do. Oh, yeah, Trump said this. Oh, yeah, he's a dickhead. Let me go put some money here. That's all what smart investors is doing right now. So, Trump tacoed again, meaning he said, Iran, I want all the war. Then he said, all right, no, it's a ceasefire. We ain't gonna do nothing. So what that means is he taco. He talk a lot, but he chump out. So when Trump taco, that's good for the market because investors like, all right, that risk out of the way. At least we ain't gotta worry about this high energy prices. When that happened, what did I tell y'all to watch out for? The oil prices came down. They stabilized under $100. And what did I tell y'all was gonna happen when that happened? Stocks went up. I'm not no genius. I'm a C+ student. It's just some stuff. I've been doing this for a while. It's like, oh, it's kind of common knowledge once you know. Y'all ain't tapped into the stock market, so y'all don't be knowing. Like, it's just like if somebody ain't tapped into football, they ain't gonna know all the calls and all. You have to explain some stuff to them. It ain't like it's rocket science, you just ain't in the know. So it ain't no rocket science that you need to do. All you gotta do is see which way the money is positioned and slide right in line. Also, what happened is the cooling inflation data, all right? The producer price index came in at 0.5%. Why is that good? Because they was expecting 1.1% of producer price index. They was expecting it to go up 1%. It only went up 0.5%, so that's good. Also, the corporate resilience, despite all of this stagflation, remember I was talking about stagflation? Despite all of the stagflation talk, the S&P earnings growth expectations, it revised upward of 12%. So with all of that stuff going on, they saying, oh no, the S&P probably gonna rise 12% for the year. Like, that's what the analyst is saying. So if they saying that, it means that's good for the market. All right. And also, like I just said, oil stabilized. When oil comes down, energy prices come down. We see the gas coming down at the gas pump. That's good for the markets because that gives investors hope that the market is still going to run and we got a strong economy. What to do? This ain't just a channel I'm just hyped, talking, yelling, and screaming and all that. I got to give y'all a course of action and what to do because we got to position ourselves. Number one, or what I always tell y'all, man, stay the course. Whatever stocks you already been buying, dump down the nose. Make sure you take advantage of your Roth, your 401k, your tax-free retirement fund. That's what you should really be taking care of. You should really be trying to max that joint out. It's only $7,500, and I know people like, damn, $7,500. I mean, listen, $7,500 is a lot, but I'm saying if you can max that $7,500 out in your Roth, you're gonna be way good. If you can max that out every year for 20 years, you're gonna be super good. Stay the course, double down in your Roth, and if you have to, rebalance. I'm still shaving NVIDIA. Just ran up again. It's like, yo, I gotta take some off and just buy some in another account because I don't want it to overtake. I don't want it to be a bigger percent of my portfolio than it needs to be because there's going to be weighted heavy in NVIDIA. And then if NVIDIA fall, my whole portfolio will fall. And we trying to CYA, we trying to cover our ass and make sure we cool around here. Rebalance, shave some, take some money off the table. Nobody ever went broke taking profits. Take some money off the table, position it in something else. Open up another account. You should have like 2-3 accounts. An options account, you should have a Roth retirement account. You should have a regular investment account. You should have a joint account that you investing with somebody. Honestly, if you got one account, that's too close to none. We already know. That's just like having one source of income. It's too close to none. You want to take advantage of the times that we are in right now. Like I said last week, you might have missed the bottom. If you was waiting for the bottom, I'm trying to wait until it all gets to the bottom and everything gets super cheap. And it was super cheap for like half a day. And all that went right out the window. So just stay low and keep firing. Buy and hold heavy. And if you do go options, go lighter than what you used to. If you used to put in a stack in, put 500 in. If you used to put in 500 in, put a couple hundred in. You don't want to miss another run up. If it's a company that you're looking for and that you're looking at and you would be mad if they ran up, put something in that joint. Put a little, 45-day, 90-day expiration call option in because you're going to be heated when you miss that 10% run up in the week and you're going to be scrambling. No, I had that dry powder on the side, like I said. Like, that's what we should be focused on. Dry powder, buy and hold, waiting for opportunities that we really want to get in. And you want to keep the money in your account as long as possible, man. It's for our family. We got to pass these accounts down. Got to give Ian credit for it. He said, if you want to have generational wealth, you have to hold on to something for a generation. I'm going to let that sink in. So stop being so, I need a quick flip. You want generational wealth, right? It's really simple. Hold on to something for a generation. Stop selling grandma's house as soon as you get it. What to look out for, all right? Consumer sentiment. We ain't got to look out for that because that already came out. I'm going to let y'all know what happened. Consumer sentiment ain't looking good. And all consumer sentiment is, and shout out to Wall Street Trapper, man. He is the GOAT because he always give me different ways to explain some stuff so it can get clearer for people to understand. All consumer sentiment is how consumers feel about spending money. That's all that matters. So if the sentiment is good, then people going to be spending money. If the sentiment is bad, people not spending money. That's all it is. It's like when you and your partner, your boyfriend, girlfriend, husband, or wife, you come in the house and you know they got an attitude. The sentiment in the house is not good. The sentiment is not good. Like, that's how Track broke it down for me. I said, that's a good way to explain it to people because it ain't nothing but checking the temperature of the markets. Consumer sentiment was not good. All right, headline sentiment index was down. Current economic conditions is down, and the index of consumer expectations is down. What that means is people not feeling good about the economy. People like, what is going on? Even though the market's still running all-time highs and all that, it's still a lot of uncertainty. So people like, no, I don't believe it. Plus with the jobs, even though people are losing jobs, unemployment still hasn't hit a crazy rate. And also the jobs report wasn't looking as bad as it has been. So recently the job report has been looking a little better. So that gave investors more confidence to throw some money back in the market. Also, this week you want to watch out for the AI cybersecurity risk, all right? Because the government said that Claude and AI, once they get into these government systems, that they can expose some government secrets and all that. So we might see a pullback on these software stocks coming next week, like all these Palo Altos and all the SanDisk and all them microns, we might see a pullback on them coming in the next couple weeks, because with that, that's a serious thing. You know how government get when it comes to them classified documents. And the last thing we want to watch out for, of course, is energy in the Strait of Hormuz and the blockade. All right, I mean, I know everything kind of cool, everything cooled down a little bit, but it's still going on. All right, it's still a blockade. Trump's still saying Navy shoot any ships. That's not. It's still a lot of uncertainty with that. But overall, the market and investors look like, man, whatever. I don't care. I'm trying to buy some stocks. I'm trying to make some money. That's your Financial Friday. Appreciate y'all for being here. You already know, man. Grab your free stock on the way out from Robinhood. Get your free $100 when you open up a high yield savings account with Allah. And you already know the motto around here, man. Let's go get this money.